Hey, what's going on, everybody? I am here with my good friend Jeff. Jeff, what's happening, bud?
Hey, another day in paradise, right? Almost end of the
Yeah,
year.
exactly. So Jeff had an awesome idea. We came out with Capital Tools. We did a soft launch, and we're getting a lot of great results for clients. But one of the things that Jeff wanted to go over today is what are some of the top mistakes that people make when applying for financing, and kind of how to correct them, how to avoid them. And we have a complete list that it's really going to help you guys, even if you don't work with us. All right. So this is pretty major, and I'm going to start off. All right. I think the first big challenge that a lot of people don't realize, and we'll get into the little nitty gritty stuff too, is sometimes people are just applying for the wrong program. Okay. Now, people apply for the wrong program for a couple of reasons. One, you don't know what's actually out there and what's available and what's the right tool for the job. Or two, the place that you went to only has one or two programs and they're not telling you the truth and they're just going to come back and smoke you with a cash advance. Okay. Which is more and more prevalent today in certain circles. So here's what I would tell you: understand the programs and how to use each and every program. One of the biggest ones I can give as an example is anybody that is doing business to business. So manufacturing, logistics, vinyl wraps, anyone that serves a business and waits, let's say 30, 45, 15 days to get paid because you're invoicing after the work is done. Oh, I see a lot of clients actually applying for a line of credit instead of invoice factoring. And the challenge is invoice factoring will actually solve the challenge, whereas getting a line of credit and using it for that purpose will actually make the challenge worse. It's going to basically just add a payment, and eventually you're going to cap out on that line of credit and still have that problem. I'm not saying people in the B2B space shouldn't use a line of credit, but they should set up invoice factoring first and then use the line of credit or have a line of credit. So that's a big one. Jeff, why don't you go over one for us?
Well, actually, I want to expand that out a little bit too to give an illustration there. It's a little more specific, and you know a little bit about it, obviously. As you said, and I need people to hear this. Sometimes you're brought in under a certain pretense. You tell the lender, whatever lender it is, I don't care if it's alternative lender, bank, private, doesn't matter. Say, hey, I need this. I need a 90-day bridge loan. I need a long-term finance loan, whatever it is. You tell them what you need. And they start going down that path. And somewhere in the middle, they switch you over to another product that's not designed for it. Again, there's certain tools for certain jobs. And so you have to pay attention to the details, the nuance, because what happens is they'll keep putting on a good dog and pony show and telling you what they think you want to hear. And all of a sudden it's time to sign something. You need to look at it, read the fine print, and all of a sudden you find out that you're not even doing interest anymore. You're doing some type of factoring play, and you're paying ungodly amounts of fees for a short-term loan. You need a 60 or 90-day bridge loan, I don't know, for example, and you're paying $70,000 or $80,000 for $200,000 or $300,000 for 60 days, hypothetically. I share that. I'm being kind of sarcastic about it because that's exactly what just happened in one of my companies, and we had to call him out on it. And then he starts lying, literally starts lying about it, and it's a little bit disappointing because up to that point he was doing a great job, but you, as the person who's accountable for your financing, have to be smart enough to know what's going on. Doesn't mean you have to know everything, but pay attention, especially when it comes down to the final 1 yard line. You're about to sign off on stuff. Stop, review it. You may even need to have your attorney review it, depending on how big of a deal it is. But read all the clauses. Read if is there a prepayment penalty? Maybe there is, maybe there's not. So, for example, one of my loans with a 504, if I pay it before a certain time with the SBA, there is a penalty. But after a certain time, there's no penalty. Certain other ones in factoring, there's going to be a huge penalty. They don't call it a penalty, but it just happens to cost you a lot more money. So whatever you want to call that. But understanding the terms of your financing is very, very important. Like he was just saying, with the difference between a line of credit and invoice factoring, it's totally different tools how they get there. Unfortunately, we all have been trained to think money's money. Well, it is, but it isn't. Kind of, if you buy a business, there's price and there's terms, and those terms can really get you. Whether it's a financing product, whether it's buying a business, whether it's buying a house, whatever it is, those terms can be very creative, but can also be very one-sided that might hurt you. So pay attention to that, and don't be so excited just to get the money in your hand, because I know you're excited for your business. You're passionate about what you do. You're like, yes, I get the money. But make sure you don't say yes today, and then a couple months from now go, no, I screwed myself. So it's those last-minute things and those terms that you got to understand and read through. And if you have questions, you got to ask them, because if you're not clear what you're signing, you might really be getting the shaft.
You shouldn't be signing this. Here's another one, guys. Before applying, okay, we see this a lot. People don't know what their credit is, okay? Real simple. Set up a Credit Karma account, and it's not going to be accurate, but it'll tell you any changes, so you can at least monitor it.
Right.
And you want to know where your business credit is, your personal credit is, because then you understand what type of leverage you have or you don't have in the situation, okay? Because depending on what credit score you have, that's going to be one of the main drivers in what programs are available to you. The other one that kind of falls in line with that, and we see this a lot, you never want to have an application that has a PO box on it. Anytime you're applying for financing, never use a PO box. It's a very, very high indicator of fraud, and it's probably going to get flagged. And additionally, when you're looking into business credit, you always want a professional email. So that means it should be Jonathan@integratedbusinessfinancing.com, not Jonathan Funds Businesses at Gmail. Okay, the Gmail account, the Gmail is going to get flagged versus having a domain for your business that you operate and have an email under. That's not going to get flagged. So those are just two things right off the bat.
So you're not still using your Jonathan Big Dog at AOL.com?
Yeah, basically. But you see it every day. I see it every day.
Well, my partner still uses an AOL address. He says, I don't get a lot of spam because nobody even tries to hit those anymore because they're all dead. I'm like, all right. But he's got other emails too. That's the thing. Yeah. So another one I'll bring up, and we've talked about this several times in different contexts, is timing. The best time to get financing was as far back as you can go behind you, okay? Next best is right now. So, for example, I was just dealing with this with two clients in our business brokerage. One of the things that Jethro Hopkins and I do as business brokers in NCBA, we get a business and we get it pre-approved by the SBA before we even list it. That way, it's already set. Things are in motion so that when a buyer comes in, they know that's been pre-approved, which means it's a good model. Check off things for the SBA. They still have to get approved on their side, but it gets it done ahead of time. Just like many banks, depending on the type of market, buyer seller market for housing, some people get pre-approved for a certain price range for a house so they know what they can deal with. If you wait until you're buying the business, or you wait until you're buying a piece of equipment, or you wait until you're buying the house, then you go, okay, please, Daddy, could I have some money? All right, you're at the 11th hour. You don't have any leverage. You can't go shop around. You're under the gun. And so you need to have financing in place. And the other backup for that we've talked about is having that line of credit, whether business, personal, or both. That way, when you do go set financing, if something happens, you can use that to bridge you or do the financing there, then refinance it later. But that timing, don't take anything for granted. Don't expect things to always be good, because there's people that waited and then took a loan later. Instead of getting 6 or 7%, now they're paying 11, 12. So it's always good to get it as soon as possible. You can always upgrade or refi, but having that done, having your ducks in a row, whether it be on a business opportunity, whether it be a marketing campaign, even if you can run into some crazy deal, but you need 30 or 40 grand right now to do it. Well, if you have your line of credit or if you have financing in place, you've got it. If not, you go to apply for it. It might take weeks, days, whatever. You may miss those things. So again, that's one of the mistakes we've mentioned, but I want to keep harping on it. Have your financing done as soon as possible. And if you go and get turned down, well, now you know what you have to fix to get approved by the time you actually need it.
Yep. And guys, what Jeff's trying to say is the best time to apply for financing is when you don't need it, especially a line of credit. If you don't need it, you're going to score out really high and you're going to get much better terms. And then you always have it ready and available for you. All right. I'll give you guys another one. Applying at the wrong place. All right. And this is a little bit harder because of how everyone presents themselves.
Yep.
However, you want to make sure that wherever you're applying has all the options available to you or all the options you might need. Okay. Most banks. So I went in, I'll give you guys a quick story. I had an account set up at SunTrust, which is now Truist.
Mhm.
All right. I asked them what they do when one of their entrepreneurs needs financing, and they said, "Oh, we just push them into a home equity line of credit." That is the worst product you could use for that. Yes, it's cheap, but the problem is if something goes sideways, now your home is in jeopardy. All right.
Yeah.
So based on that, and he even told me they don't have the other programs available. So if you applied there, you're definitely not getting the right answer. Here's another thing: if you go apply with a broker who only does cash advances, all you're going to get is cash advances, and they're going to piss in your ear, tell you it's raining, and it's not. Okay, so you actually want to dig through reviews. All right, see. All right, if you have reviews on there, do they do SBA? Do they do lines of credit? Do they do equipment financing? Do they do invoice factoring? And I'm going to tell you right now, almost nobody has all of those.
Right.
Right. We do because we intentionally set up that way, but most people don't.
Right. If you go to a surgeon, they're going to tell you need surgery. Whatever they do, that's what they're going to tell you need.
Yeah.
So it's good to be aware of that and have somebody that can be your point person that knows all the products and can help feed you into the right ones and has the right partners to do it. So you need somebody to be your quarterback, so to speak, and help you where you need to go versus go to the specialist. Oh yeah, you need me. And that's what they're doing to you.
Yep. That's it in a nutshell. And then the last little bit of this, and something a lot of people don't understand, is you need to clearly communicate with who you're working with.
Mm-hmm.
All right. Meaning when you're applying, you need to let them know what are all your pain points, what are all your challenges, okay, and where you're actually at present day.
Right.
All right. Because without that information, even the best in the business aren't going to be able to get everything that you need done because they might not have any of the information that's relevant to help and make good decisions.
Right.
All right. So what does that mean? You need to be very specific on when you need the money, what challenge you're trying to solve, and how it's going to help you. All right. That's really, really, really important. And I'll take it a step further. A lot of people, when they're going through the process, it's very unclear. They don't have their documents together. They don't have everything ready. You want to have everything updated on a monthly basis. So your financials, your personal financial statement, all these things, if it's updated on a monthly basis, you have all that valuable information at your fingertips, not just to apply for a loan or apply for financing, but also as your own report card and as your own company report card, so you can guide the company and yourself to actually build real wealth.
Right.
All right. And that's just as simple as having a good bookkeeper and having a decent accountant that deals with everything at the end of each and every month.
Well, it's about keeping score. And so, for example, when they go to work with a dietitian or a personal trainer, say, write down everything you eat, right? As soon as people have to start writing it down, you know what? They eat a hell of a lot better, don't they? All of a sudden, I don't want to write that down. They immediately start eating better. So I don't know, maybe if you had your books done and your personal financial statement done, you have to be accountable for it. Then you start doing it. You start paying attention to it and making it better. It has your focus. And I want to tie that into something else that goes right along with what you're saying. Have all this stuff updated. Make sure you are clear with them what you need. And also be clear with them on your scars. In other words, if let's say you had a late payment once out of 30 years, you had a late payment. It was 2 months ago. You bought a new vehicle, hypothetically for your daughter, and it was supposed to be set up on auto pay. Didn't get done right, so you have a ding for a 30-day late payment that you're currently working on getting rid of, but it's on there. If you explain that, you explain to your guys or women, whoever you're dealing with ahead of time. Now they're empowered when they're talking to the underwriting trolls to tell them what's going on instead of getting blindsided by it, and now you're being reactive. It's always better to be proactive than reactive. Tell them the real stuff, okay? Here's the other part that's parallel with that. Don't lie on your crap, okay? Back in the day, stated income, 2005 and 2006, bank loans. You work at McDonald's, tell me you make $500,000 a year, they'll give you $1 million loan. Cool. Now, not so much. They're going to pull your taxes, so do not put down your income as being something 5 times what it is. They're going to pull your business stuff. Don't lie. If you put in conflicting information, you look shady as hell. Yep. If you take a month to get it to them, again, you look shady as hell. Just be honest with them. We've talked before. review the trainings. Before you go take a big loan, you need to maybe talk to your CPA, make some adjustments on what you write off or don't write off to show some more income to qualify better. Okay. But what you don't do is flat out commit fraud, perjury, whatever you call it, and lie on forms for taxes. That goes real bad for you. Don't do it. Don't do it. Don't do it. Find a way to get it done. Be very honest with them. Say, hey, I got a late payment here. Here's why. I got this here. Here's why. Explain up front. And here's the other thing. Right in with that. For example, if you have your car payments paid by the business, you better be able to show it. Don't be paying it yourself, then try to pretend you pay it with the business. You've got to be able to back those things up. So be very open with your lender, your broker, wherever else, and so you can help them. And that way, they can guide you to different tools to get it done, or maybe even help you correct it, or have a way to explain it to the underwriting trolls before they come back with it. That way, again, you're being proactive and get things done.
100%. And guys, there's a bunch more, but we wanted to give you just the top ones. If you want way more in depth, I posted in the comments, Capital Tools. Join us there, get access to the private group, get a one-on-one strategy session with myself. It's a no-brainer. Okay. If you guys want to make 24 the best year yet, you need the information, you need the knowledge, you need someone in your corner that can actually make it happen. All right. If you guys have questions, me and Jeff are pretty available. All right. Yep. I hope this helped you guys.
23 woke up a lot of people. 23 should be a warning sign for you. So if you want 24 to be better, be proactive.
100%. Now do us a favor, like this, share it with someone who needs to hear it. All right. And then we'll see you in Capital Tools. All right.
See ya.
Take care, everybody.